Happy New Year, everyone. Welcome back to WealthTom with me, your host and founder of WealthTom, Norbert PM, bringing you a fresh new year with a fresh perspective and a fresh portfolio review with changes that I made to my portfolio, what I bought, what I sold, and why I did it. Also, we're going to do a risk assessment, as always, of the upcoming week for the market so you can better prepare. One special announcement. From this year, I'm going to completely reveal my positions. So you're going to see exactly how much I hold, what I'm up, what I'm down in, and how I'm basically managing those positions. So let's first of all take a look at the S&P here. Generally, we had a first 2 days of January. So this is the second and the third day of January. The second was a down day, but the third one was a massive update. It ended in 1.23% in the positive. The S&P, that is. The Nasdaq ended in 1.65%. So generally speaking, I think, or this is actually pointing towards a pretty good January of 2025. Now we do have the US presidential inauguration on the way, and I think we're going to have a pretty massive rally into that inauguration. After that, I don't know what will happen. So let's do first of all the portfolio review with what we sold. I'm going to reveal all of my positions. So there we go. Let's also weight them. This is reverse, and this is my highest weighted position, which is of course my treasury bonds, 7,825 shares, and they're currently trading at a this is in euros because I'm in Germany, and also this is my own platform. I'm kind of, because I manage multiple portfolios, they're all centralized in this one application. This is my personal application, so don't stress this. So we are currently up on this position with 0.32%. You do know that bonds had a massive sell-off in the end of December, and this is why we're down. But why we're down with this position, it yields a 4.66% currently, which would return a 1,130 euros in this case in 1 year. So holding this actually got my first one in December, my first return, and it's only yielding not quarterly but once every half of the year. My next biggest position is CVS. I'm also massively down on CVS, minus 26.51%. I currently have invested 10,000 euros in it. Then we have Advanced Microcomputers, also down on this position 15%, and so far and so on. So let's just first of all sort by what I didn't open any new positions in December, and also not in December, already know the last December video that I did, but in January I didn't open any new position, but I did reduce and add to a couple of positions. So let's first of all start with reducing, or let's start with closed positions. One position was closed, not this one, the S&P Spider. I'm just watching this, but one position was closed, and that is the Toyota Motors Corporation. Although this is an exceptionally good company, not an exceptionally good company, let's be honest, it's a good company. I did take my profits here, and I'm going to say bye-bye for now for Toyota Motors. It's also massively overbought. It did bounce here back a bit, but I took my farewell for Toyota Motors, basically due to the fact that two of the biggest automakers in Japan already had a merger, or they're trying to merge, and Toyota is most likely on the same list. Now, due to the fact that it is in a massively overbought position, I completely closed this position. I also entered roughly up here somewhere, so I didn't have that much of a gain, but I closed this position. I'm not going to revisit it until I'm going to see how the auto industry will perform this year. So we're talking about BMW, we're talking about Volkswagen in Germany, we're talking about Toyota, we're talking about Ford. All of these companies are under the pressure of two major players, and there's one is Tesla, and the other one about that, and the other one will be whatever Chinese company you want to add to it. But these are the main two auto players in the auto industry. So this is why I took my farewells from Toyota Motors, and this wasn't all that I did. I now added or increased my positions to Novo Nordisk because they had a huge drawdown in the market. One of their tests failed, and I believe that's nonsense. That's nothing. This doesn't have anything to do with the long-term perspective of this stock. So I added to this position to Novo Nordisk. Then I also added to Exxon Mobil once more. I opened this position in December right down here. So I think I did do a bit, but this is going to be a trading position. So they also increased the dividend. This is very interesting. Exxon Mobil increased their dividend. They're one of the dividend kings, and they're currently yielding, with the dividend up here, 3.67% on a year. So if I hold this for an entire year, I would 252 euros. Also, my complete yield of my portfolio, if I don't make any kind of changes and I get all of those dividends, would be a 2.52%, which is a $3,018, because my entire portfolio is currently of 156,292 euros. I'm still saying dollars, but it's euros at this moment. moment. Now I did add, so to close up with ExxonMobil, why did I add to ExxonMobil? It was pretty oversold. ExxonMobil is one of the biggest oil refinery companies out there, so energy companies. They also are not a major player, but a good player in uranium, and we should see, so uranium, gas, oil, everything that has to do with energy. So ExxonMobil is one of the companies. I even think at this moment, if it has a little bit of a pullback, it's still a possibility to add once more to this position. Furthermore, I added to Brookfield Corporation. It's currently bouncing back from its oversold position, so this is going to trigger a buy signal, and hopefully this buy signal is going to go up, 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 and maybe there is where I'm going to reduce or not sell, but only reduce that position. Let's see how this handles. So Brookfield Corporation is also a major player in, well, basically any money producing industry. Did I already do a deep dive on Brookfield Corporation? No, I still have. I think I'm promising this for like a couple of months now, but I'm going to do a Brookfield video. Okay, so that's it with what I added to. Now I reduced a couple of positions, and that is from HIMS and HERS, basically from HIMS, so ticker symbol HIMS. I reduced just a tinge from this position. It was due to the fact it's not overbought, so it was due to the fact that I needed a little bit of money and I invested that somewhere else. Also, I reduced from CrowdStrike, and I plan to massively reduce once more from CrowdStrike after it's going to go over a overbought position. So once more, I reduce from HIMS, ticker symbol HIMS, and I reduce from CrowdStrike, ticker symbol CRWD. There's nothing wrong with these two companies. I'm just reducing just a tinge from it. Let me take a sip of coffee, because I saw better opportunities in the market. So I didn't open any new positions, and I'm currently watching Boeing. So if Boeing is going to go through its correction here, I could end up adding back to Boeing, because I sold out of Boeing a couple of weeks back. So that's all of the changes that I did. If you want me to do a complete run through my portfolio, please leave a comment in this comment section below, and I will gladly do that. Okay, now let's do a little bit of risk assessment through the market. Let's see. Currently, the market is in it's coming back from an oversold position. So I would say, let me just take here let's start with the RSI. RSI is at 48.58. So I would consider this, because it's so near to its 50, I would consider this a medium risk in the market. This is only for the upcoming weeks. Then the MACD is trying to trigger back a buy signal, so weak sell. So I also consider this a medium risk in the market. The S&P is not overbought. It had a good day, maybe Monday. So because it closed up on Friday positively, it could open also up on Monday with a good positive if nothing happens over the weekend. Currently, I'm looking at Bloomberg. No major events are happening. So let's just say that risk is low in the markets. Let's add to this a low risk. Now let's take a look at a couple of economic moves or economic events. Let's see what the market has for us over the next week. So we're currently talking about the 6th to 12th of January. So we have the ISM services, which are expected to come in better than the prior month. So we have ISM, we have the JOLTS report, we have the FOMC minutes. So we do have a couple of interesting events on. So we have on Tuesday ISM services, also the JOLTS report. And then on Wednesday we have the FOMC minutes. And then on Friday we have non-farm payrolls and unemployment rate and the Michigan consumer sentiment. So it's a pretty eventful week next week. I'm going to let's just say here, economic events for next week are going to consider them a high risk. So we're back at 50-50 almost, so 50% risk in the market. So this market could go anyways. Maybe we're going to have a bit of a pullback, and then we're going to rally into the Trump inauguration. Maybe not. So treat this market with ease and be careful in this market. I personally, I'm looking to reduce positions. So if we have a rally, I'm going to reduce my positions into that rally. Okay, hope you enjoyed this. If you did, give it a thumbs up. If you didn't, give it a thumbs down. Definitely subscribe to the channel if you haven't already subscribed. Also, if you have any kind of questions or suggestions for future videos, I'm going to release on Monday a very special video about 10 tips that you should definitely consider when you're investing. There are 10 major rules that you need to take into consideration wherever you make any kind of investment. Remember, everything I'm doing here is not investment advice. It's just for educational purposes and for your entertainment. So are you not entertained? Ladies and gentlemen, thank you so much for watching. I'm Novo Nordisk, wishing you a safe 2025. Catch you next time. Bye-bye. Bye-bye.